Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the Kickstart video. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. Today's date is October 16, 2024. Let's get started. Let's start by taking a look at the euro versus US dollar, and I'll focus on the 4-hour chart. What we saw at the beginning of the week was that the price moved below its 100-day moving average. That's a blue line in this chart. We did have a test of that 100-day moving average right here before moving to the downside and trading yesterday. Yesterday and today we've seen a rotation further to the downside that has taken the price to the next key target. What was that? The 200-day moving average. That 200-day moving average comes in at 1.08729. That's a green line in this chart. Also near this level is a swing area going back to these periods right through here where we had a number of different swing lows and swing highs that came in around this area right here, here, and here before moving to the upside. We came down toward that level here before moving higher, and we haven't returned to that level until, well, today, where the price that came down toward that swing area, toward the 200-day moving average, happened to be at that same top point, and we saw a rebound back to the upside. Now that rebound back to the upside came back to the low of this swing area, which happened to be the low from last week as well, and we found willing sellers against that level as well. That level comes at the natural level of 1.0900. So as you can see, technically we are doing what we're supposed to be doing, buying off support against the 200-day moving average off the swing level, selling against the 109 natural level and this the low of this swing area through here. Now the buyers and sellers are battling it out, and they need to figure out which way they want to go. Do we want to break below the 200-day moving average, increase the bearish bias through here, or do we want to start to pick away at this swing area and move back toward our 100-day moving average, which was from whence we started this week, and that would be the next target on the top side on a break of the 109 level, 109.12 level. So that's my look at the euro versus US dollar. Let's take a look at the dollar versus yen on a 4-hour chart. This week we started to move above a prior high going back to this date right here in the middle of August. I think that's like August 15th. And recall from last week, we did move above those levels on all these little strings right here, moving up to a high of 149.55, as a matter of fact, which is about 20 pips higher than the 149.35 level. And we extended that run to the upside through here, but fell short of targets, including the 100, 200-day moving average up here, the 50% retracement level. So didn't in fact get very close to it. We started to rotate back to the downside and trading yesterday. We traded mostly below that 149.35 level, and trading here today we traded mostly below that level as well, with little moves above it here and here, both yesterday and today. We are currently just above the 149.35 level, which should give the buyers a little bit more of a oomph or a little more control. We'll see how that all plays out, but what we do know is that although the price has been able to get above this level, we haven't been able to stay above it. So there is somewhat of a battle going on above and below the target level, which comes around between the 148.89 level and this level up here, which is near the, well, just above the around the 150 level, I guess I should, is where that level comes in. So this is the trading range, obviously, for the week, and also sort of dissects the prior high going back to middle August back here. So for what it's worth, the market is up and down, volatile, or not volatile, I guess, in trading for the dollar versus yen. We'll see which way it wants to break going forward. Let's take a look at the sterling versus US dollar. We did have UK inflation data come out weaker than expectations in trading here today. That took the price below this low price right here, which was right around the 130 level. Nice round number, nice key level. The price did break below that level, but fell short of the 100-day moving average, short of the 61.8% retracement of this move to the upside. Kind of came in between that 130 level and this level down here before rotating back to the upside. If you look very closely, you can see that the current 4-hour bar did hold support right against that 130 level. So the buyers are leaning again against the 130 level, currently trading 1.3016, and on the top side we have the 50% retracement of the move up from our low price that we saw in the month of August to the high price that we saw in September. That 50% retracement level comes in at 1.30488. So if I were to analyze, pick two levels of importance here for the sterling versus US dollar after the failed break below the 130 level, I would look at getting above the 50% at 1.30488 as more bullish and likely to lead to further upside probing. Conversely, if we stay below that 134.88, and the bias is more to the downside, folks, here, given the move to the downside, given the inflation, given the expectations that perhaps the Bank of England continues its easing bias, that we would break below the 130 level, move down toward the 100-day moving average at 61.8% retracement. But it takes two to tango, and it's the U.S. dollar as well. And in play, so we'll see how all that plays out, and that will be impacted by both those economics in those two countries. So we have to be aware and just listen to what the price action is going to tell us. So there you have it, a look at the three major currency pairs from a tactical perspective. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.